Levels of support and resistance. So for me, support and resistance is the most important fundamental of learning charting and technical analysis. For me, it's what everything is built on, and it's the most important thing to learn, definitely for a newcomer as well. If you're going to learn anything in terms of investing or trading, the first thing to learn, in my opinion, is support and resistance, because everything else is built on top of that. It is literally the foundations on which technical analysis is built. A lot of people can come into the space or even traditional trading and investing and get blinded by indicators, thinking that they're going to do all the work for them. But in reality, all indicators and market structure, it's all built on support and resistance. So if you can understand the concept of support and resistance and be able to identify levels of support and resistance, it is, I believe, the most powerful tool in your tool belt. So what are levels of support and resistance? So if you imagine a house, standard 2-story house, you got floor, second floor, and then the roof. Your support will be the floor, and resistance is basically the ceiling or the roof. So much like in a house, you go in on the ground floor, you've got the actual floor itself would be support, and then the ceiling would be resistance. And then if you were to go up the stairs, suddenly what was previously resistance, which was the ceiling, is now support, because that's now the first floor. And then your resistance is then the roof. And that's pretty similar to how price action goes. What you'll find is that previous resistance can become support, and vice versa. So why is that? It's because support and resistance is the area where there is a lot of price interest. So again, as I say, what you'll find is previous resistance becomes support. It is where price is going back to a previous level of interest, where there is a lot of buying interest. So support is where the buyers outweigh the sellers, and resistance is where the sellers outweigh the buyers. And the most obvious examples of this are the tops and the bottom of charts. So if we go to this COVID bottom here in March 2020, the reason we bounce here is because there was more buyers than sellers, obviously. And actually, if we look across the chart, you can see a pretty easy level of support that was previously resistance, which is why we bounced. So what we're going to do is go through some pretty simple examples. So we're on the Bitcoin weekly time frame. So if we just look across, we can see that this is a clear level of previous support and resistance. And what I mean by that is the way you can easily identify it's where price has basically stopped and turned around. So as you can see, we had this run up here from 1,905. We stopped here at about $4,600, and we turned around. We then come up, we broke that, and as you can see, this little candle wick came back, retested as support. We then came back down, we broke through it initially, then we come back up, break through, and then hold it as support, and then we hold it as support again back here in the COVID crash. So the easiest way I find to identify levels of support and resistance from like a blank chart is looking for where trends start, either bullish or bearish trends. So basically, for me, 2 or more candles of the same color in a row, and that for me marks out a trend. So for example, we've got these 2 red candles here. So from the 8th of Jan 2018, and then the following week is also a red candle. I would say that is the beginning of a bearish trend. So I would plot a small line or box all the way across, and what you can see is all the way to current day, that is a significant level of support. So again, as I say, we came down, we come up, this is where price stopped and turned around, because obviously, I mean, we dropped all the way down to about 10k here, rallied up to about 16.5, price stopped and turned around, and as I say, we started that bearish trend. Now if we look across, this level came into play again as we rallied in 2020. As you can see, we rejected off it initially at the beginning of November. We then broke through and then came back, retested as support. So previous resistance broke, became support, and as you can see, price has come all the way back down, back to this level of around 16k from 69k. So huge decline, but as you can see, this level being respected despite how old and how previously tested it was. Another example, we can look at this level here. So the start of this decline in January 2018, again, 2 candles in a row marks out a trend. So we can just get the top of that candle there, make a small box, drag it across, just there, basically to the start of this trend here, which is almost the same level in March 2018. As you can see, again, 2 red candles in a row starts a trend, and look across that line. Look at all the rejections of this level of resistance here, all the way through June, July 2019. Multiple attempts to break through, and it didn't. And this is, again, going back to candle body structure that we talked about before. You can see the importance of the candle body closes here. So yes, we got wicks that went through it, but we didn't get any candle body closures above the resistance. So that is an important thing to note. And again, all the way through here in 2020 as well, you can see we tried to break through, we got a little wick through, not enough, and eventually rejected until we finally come up and broke through back in October 2020. So the question is, will we see this level come back and be tested as support? Certainly, in my personal opinion, that is where price will go if we lose this current level of support at 16k. One final example, so we can see the start of this bullish trend here back in July 2017. Oh, sorry, not that one. This one here at the 25th September 2017. And if we make a small little box here, drag it across, you can see that that is the level that held up back in 2018. As you can see, that was the bottom of the bear market there. So as you see, these levels very well respected, quite easy to identify. Now, as I've said in previous videos, just because this is the way I do it doesn't necessarily mean it's the only or the best way, but it's just the method that has worked for me. In the next couple of lessons, we're going to go through how to use timeframes and the significance of finding these levels of support and resistance on the timeframes you find them, and how to use them for trading and investing decisions.